Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully, you guys had a very good day in the markets today. And in today's action, the S&P pushing higher 2.5%, and the Qs a beautiful 2.97% move, almost 3%, and most of your market indexes pushing a lot higher, led to the upside by semiconductors. Of course, this comes after the ceasefire that was brokered between the United States and Iran yesterday. However, as we were saying in yesterday's video, the ceasefire terms may be open to negotiations for the next 2 weeks, and during that 2-week negotiation period, well, things might get a little bit choppy, such as this right here. Gulf countries scramble to intercept missiles hours into the U.S.-Iran ceasefire agreement. There was a couple back and forth pieces of action today between Iran, between the Gulf member states, and between members of the United States. And of course, in today's video, we're going to recap everything for you. So, is it a safe opportunity to be buying into the markets right now that we've achieved a ceasefire agreement? Is it safe to buy into the indexes now that we've reestablished our daily uptrends after being down for the better part of the last month and a half, and the fact that we've recaptured our EMAs? Is it safe to be buying into the markets when the heat map looks like this? Is the coast safe? Because when I go on social media on a day like today, you would think that people will be very happy about the gains in the market. However, all I saw was a lot of skepticism. So in today's video, that is the conclusion that we're going to try to come to. Whether or not it's still a decent proposition to be trading in the markets and how we should be buying, or whether or not we should actually be buying at all, or maybe we should be shorting the markets and being very cautious. As a matter of fact, the answer lies somewhere in between. As you guys know, it's never truly black and white. It's always a little bit of gray. So in today's video, we're going to take a look at a few different things. Number one, take a look at the news headlines that moved the market today after the ceasefire was reached yesterday. And we'll also cover certain market statistics, market sentiment, especially from retail traders nowadays, and also a few key big tech headlines that came out over the course of the afternoon today as well. After we're done that, we're going to get into the juicy part of the video, which is, of course, the technical analysis, taking a look at the S&P, the Qs, and most of your minor sectors, see how the rotation was today, and which sectors were best positioned on the other side of the conflict, meaning when the ceasefire was potentially reached, which sectors were we possibly curious into as to position into, right? We've been talking about this in the past 2 weeks, guys, and there were some clues. Every time we got some nice bounces, it was the same names and the same sectors that were responding really well to them, and the same names and the same sectors that were not. We'll take a look at that rotation and talk about it once again. After we're done that, we'll get into our big tech name list down here, and once again play the game of, are these names still investable at current prices for long-term portfolios, or possibly might we be able to explore some swing trades? And at the very end of the video, we'll take a look at the biggest gainers and losers of the day, and once again, go over the names. Even when the S&P is up 2% and the Qs are up 3%, some names perform very well. And if you've been watching the videos for the past 2, 3, 4, 5, 6 weeks, you probably know exactly which sectors performed the best today with the most outsized gains. And conversely, you can probably guess which sectors actually performed the worst. Look at software again. And that's because Claude dropped another tool today. But even before Claude released the news, the gains on them were just very, very, very soft to start off the morning. So even though Claude unraveled a lot of that trade, they didn't start off that well. We covered it in yesterday's video when we looked at the after hours moves on some names. There was a lot of semiconductors up 4, 5, 6, 7, 8, 9, 10%, and a lot of software companies only up 0.5%, 1%, 1.5%. Very soft performance there as well. So that's going to be it for today's video. Let's get right into the action, because even if you believe in this run right here or don't believe into it, there's always something that we can learn in terms of the pricing dynamics that the market is showing us right now, and especially the rotation. So in terms of the S&P up 2.5%, as we said, the Qs up 3%. Take a look at the rotation and the heat map here. Well, most sectors performing very well. What didn't? Software, and unfortunately, Palantir and Microsoft still getting dragged down as part of that infamous software/IGV trade, because this software ETF, the largest two players in there are Microsoft and Palantir, and it seems as though every time some news headlines bring down the entire index, it brings down Microsoft and Palantir as well, unfortunately, and of course, all the other names down there. The rest of semiconductors, though, doing very well. Big tech doing pretty well today, except for Tesla, still struggling after its delivery numbers recently. The banks and financials doing really, really well on a day like today. Healthcare also participating heavily to the upside, and we needed those three sectors to come together at the same time. Big tech, semis, financials, and healthcare. That's how you get the really outsized moves, because these are the outsized sectors. Consumer defensives also responding well on a day like today. That's because the probabilities of interest rate cuts are now possibly back on the table a little bit for the month of December. And the fact that oil dropped obviously did help consumer defensives and consumer discretionary. Industrials having a very good day after being dragged down in the mud for the past few days in terms of the most volatile days of the conflict. And to the downside, you can probably guess what happened here, right? Well, some of your interest rate sensitive sectors, they didn't respond the best, but they were up after we got some increases in rate cut odds for the month of December. A little bit, not massive, but a little bit. But the energy stocks, obviously on a day where oil is down, 15% from recent highs, well, this energy trade is going to come down a little bit, but we might be able to find some opportunities. And I'll tell you guys at the end of the video which names I'm looking into for the energy trade overall. Moving on to your one-day relative, you can see even better what happened today. Most of the segments of the market were massively higher, led to the upside by industrials. A bunch of data center-specific industrials were much higher on a day like today. And sadly, energy coming down after rallying tremendously for the past 3 months. 1 week relative, same picture. The S&P has largely been up. It seemed as though we could barely put together like 3 green days in a row for like the past month and a half. And now it's pretty much been like 6 days of green in a row. So very nice there on a 1 week relative. Most of the market moving higher, but being left behind is energy. If you take a look at the 1 month relative though, even after 6 days of bounce, guys, still half of the S&P sectors are in the red. And your best performer, even though it's been coming down for the past week and the past day, is still energy. So keep that in mind, right? Now, before we get into more technicals and talk more about the rotation and the market breadth, let's have a quick look at some of your news headlines. So fear and greed index right now planted at 31, a far cry from about 2 Mondays ago. We got the current lows of the market when the extreme fear read was at a 8 or a 9. Investor sentiment, we're going to get an update on this come Friday, but for the time being, most of your retail investors that respond to this survey, AAII sentiment survey, are still very bearish on the market outlook for the next 6 months. I'll be curious to see if this number actually declines after the most recent bounce, or maybe it actually increases. We'll get those news results come Friday or Saturday. Now, in terms of the actual headlines that moved the market today, the Gulf countries scrambled to intercept missiles hours into the US-Iran ceasefire agreement, which prompted a comment such as this one from Iran's foreign minister, releasing a statement regarding Israel strikes on Lebanon. So essentially what happened is Iran fired a bunch of missiles towards Israel. Israel fired a bunch of missiles towards Lebanon. And then basically you got this quote right here. The Iran-US ceasefire terms are clear and explicit. The US must choose ceasefire or continued war via Israel. It cannot have both. The US stopped all their strikes, but Israel firing a lot into Lebanon today against Hezbollah. The world sees the massacres in Lebanon. The ball is in the US court, and the world is watching whether it will act on its commitments. And that rocked the markets a little bit in the early hours of the afternoon. Moving on a bit further here. Here are some comments from J.D. Vance, who will be in Islamabad, Pakistan, to start the negotiation talks between the U.S. and Iran, essentially, over the course of this weekend. Now, he made some comments pertaining to this quote that we just read, and saying that ceasefires are always messy. An hour after the president announced the ceasefire, the Iranians launched a bunch of missiles. Then the Israelis responded. Then some of the Gulf Arab states responded as well, saying this is the nature of a ceasefire. No ceasefire ever goes without a little bit of choppiness. Words from J.D. Vance as he is about to embark on his journey towards Pakistan to start the negotiations over the next 2 weeks. Moving on a little bit further here, Iran has, after these statements made by them, Iran has told mediators it will be limiting the number of ships crossing the Strait of Hormuz to around 12 per day and impose tolls under the ceasefire. This is a sharp reversal from last night's statement from President Trump claiming a complete opening of the Strait of Hormuz. Today, just 4 ships have passed through the Strait of Hormuz, the fewest of any day in April so far. The U.S. is still pushing publicly for a free and open strait, but Iran is not showing a willingness to loosen its grip. Now, all that being said, oil still stayed relatively low today. So you possibly do have a lot of oil traders, a lot of institutions betting that even though there may be some disturbances in the early days of the ceasefire, that perhaps conclusively we will have more of a broad opening of the Strait of Hormuz as negotiation talks do advance. So far, no further spikes in the price of the barrel of oil, but definitely a little bit off its lows of the day, which are about 91 for a barrel of WTI. Okay, so that is the quick recap of exactly what happened today overall. Now, in terms of some, and we're going to talk about this obviously, right, and its impacts on the markets a little bit further when we go through the TA. Moving on a little bit further here, some sentiment. We have seen one of the weakest periods of relative returns for technology over the past 50 years. Take a look at this, guys. There's your medium and top and bottom quartiles and the top and bottom deciles as well. we are pretty much starting off the year exactly how we did in 2025. These are two back-to-back of the worst years when you look at a series of data points here in over 50 years. So definitely the damage has been done on technology, which is why I've been pounding the table, especially on some of the Mag 7 names, but also some other names in technology, namely semiconductors that we've been talking about recently. Moving on a little bit further here, investors have been rotating into cash at one of the fastest paces in history because of the amount of bearish sentiment that we have, fear and greed, the momentum, number of stocks at their lows, etc. Right? Now you can see the impacts of that. A lot of people moving to cash. But you know what's funny is that usually when you find us peaking above these thresholds, it tends to be very close to a market bottoming process. Every time people just move to cash is usually when fear can be at the maximum, when the market velocity to the downside is at the maximum as well, which is also where the famous quotes come from that retail always panic sells the bottom. Well, possibly not just panic selling, right? Just maybe covering up some positions and reducing exposure. I'm pretty sure not many of you fully liquidated your portfolios. However, probably many of you did, not many of you, because you guys watched my videos, but possibly a lot of people did, right? Obviously, wartime escalation is no joke, and I can't blame anybody for taking money off the table, but just something we have to pay attention to here in terms of the correlation of the move to cash versus bottoming out processes in the market. Moving on a bit further here, the PEG ratio between the US and the rest of the world has reset. So the US has always held a relative premium to the rest of the world. No longer. You can see that we had a dip during the tariff situation, and when the US valuations came down to the rest of the world, we got a big old bounce out of tariffs and we regained our premium. Is it going to be the same time this time around, to where when we get the conclusion of the war, because for the time being it's just a ceasefire, we've already had very nice rally recoveries on the S&P and the Qs. Will it be a case in point where we can build more distance between the US and the rest of the world? Or will we once again be in a situation where several emerging stock markets, will outperform the US on a year-to-date basis? Moving on a little bit further here, AI has sunk software multiples to decade lows. We talked about that in the introduction, how software has just been abysmal, not only because of the conflict, but even before the conflict, back in February, when all software started selling off because of all the Anthropic releases, right, with their Claude agents and stuff like that. Here are your valuations. Look at the valuations here. This is enterprise value over next 12 months of revenues. So basically EV over next 12 months of sales, 4.6, the lowest point that we've been in the past decade. So considerable consolidation in the software industry. And even a day like today, where the indexes were up massively, still, you have names, a lot of software names that are down tremendously. They even dragged down Microsoft. They even dragged down Palantir. I mean, Microsoft was off to a great start to the day, guys. And they even brought big old Microsoft down. It was up almost 4% today, and they closed almost flat. So software definitely not the place to be in the markets right now. A lot of uncertainty. And the reason for software coming down today, well, you might have guessed it. I mean, we started off the morning good. Microsoft, Palantir were actually green, but names like Salesforce and whatnot, they never really did much. Look at Salesforce's chart. From yesterday's close to the top of this morning, it was only up 1.5%. Take a look at Adobe. From the low of yesterday into this morning, it was up 3%, but so many names were up 5, 6, 7, 8, 9. They barely moved the chart. Now, why did they close at the lows of the day? Well, once again, you got to thank good old friend Claude out here. Claude introducing Claude managed agents. And like when they released this, the first company I thought of was Salesforce, because they've spent the past 2 years investing in Agentforce. And Claude basically just vibe coded away. Well, they didn't vibe code, obviously. Claude's just a massive platform at this point, right? Many very interesting integrations from various APIs and many different tools that they have to make employee life easier, essentially. So now you have Claude managed agents, everything you need to build and deploy agents at scale, which is fun because it starts off with one agent and then you task this one agent and he will build you an entire team of other agents and they'll kind of take over whatever you want to put them onto, right? So very, very powerful release from Claude today. A lot of people on social media really enjoyed this one. I have fooled around with Claude a little bit. It's quite an expensive endeavor, I'm not going to lie, but still they keep pumping out these releases almost every single day. And this is one of the better ones that they've done recently because setting up agents is not, or traditionally has not been the easiest procedure. Claude just made it exceptionally easy for people to do. And as a result, you got a lot of enterprise resource companies that are down tremendously on that news today. Moving on a little bit further, more data here from smart money versus dumb money. So this is the update as of today. You'll see that in the most recent action, the past 5-6 days of upside, retail has indeed bought the dip, but you'll notice that institutions kind of started pairing off their bets. They're not selling in a crazy fashion. They're just not accumulating any more than they had during this entire period, right? So now they're kind of done, and retail has been doing most of the buying coming up into here. So as I was saying, right, in terms of the most recent week of price action, a lot of this move has been short covering. A lot of it also has to do with the retail FOMO that started after last Monday's close. And you can see that even better when you take a look at smart money and dumb money confidence and the money movements and cash flows that have been moving between them too. Moving on a little bit further here, this is retail investor activity has fallen sharply amid the war. Another sentiment indicator for retail, meaning that, there has been some retail FOMO, but not a lot. People are still relatively hesitant to deploy massively or FOMO into the markets. And to be honest with you, I don't really blame them. Daily net call option purchases by retail investors are down to 2 million contracts, the lowest since January of 2024. So keep that in mind. Net daily call option purchases have fallen 12 million contracts, or 85% since October of 2025. And that's roughly when the sentiment in the indexes really started eroding. After this October top, we were never really able to mount above and continue a massive uptrend. And you saw that even more because most of retail, they love technology, right? But unfortunately, the Qs, they peaked in October, revisited once, but ever since, it's just been this massive, ugly chop with then a downward bias starting into the end of the month of January through pretty much the local bottom of the market. So as a result, retail is just not having fun right now, and they're not buying options, at least your retail flows at some of the lowest prints that you've seen over the past 2 years. Moving on a little bit further here, tech layoffs, moving more into the SaaS narrative that we started, right, with AI. Tech layoffs hit 78,557 in Q1 of 2026, with the United States accounting for 77% of all the cuts. Nearly half of the cuts were tied directly or indirectly to AI implementation and workflow automation. So shout out to releases like this on Claude. Now you guys know why those SaaS companies are so much under pressure, because of the seat risk and their licensing risks, right? So keep that in mind as well. Moving on a little bit further here, more AI advancements, this time from Amazon. I thought this was a pretty cool chart. People, when they think about Amazon, they don't often think about it as a robotics company, but Amazon has one of the largest robotics fleets in the entire world. They now have about 1 million robots, up from roughly 30,000 a decade ago, as it automates more of the workforce once done by human labor. So crazy chart here by Amazon, which is one of the biggest reasons why I invest in this company as well. Moving on, before last here, well, actually, no, this is the last piece of news. Meta coming out and having a beautiful day in the markets, guys. Meta at one point today was up almost 10% before settling about 6.5%. And because they've been down so much, they really needed a day like today where they put out a pretty cool frontier model introducing Muse Spark, the first in the Muse family of models developed by Meta Super Intelligence Labs. And this one, honestly, is pretty cool, if I do say so myself. If you take a look at exactly what was said, this user, Josh Kale, compiling a very nice list here. So it is Meta's first closed source model. Now they threw out the entire Llama stack and rebuilt from zero. New architecture, data pipelines, infrastructure, and the code name was Avocado. You remember they dropped a couple weeks ago, like 3% on today because they were delaying it? Well, now it's actually here. So they threw out this guy right here, Llama, which is the bottom end of this chart in terms of artificial AI intelligence index. And now look, with their Muse Spark, they are right behind Claude Opus 4.6, and they've really leapfrogged so many different models that are out there right now with a lot of cool features overall. You can actually, well, it's multimodal. You can point your phone camera at something and ask it questions. It coordinates multiple AI agents on a single task, one planning your trip itinerary, while another AI agent finds kid-friendly activities. It has built an in-shopping assistant or an in-app shopping assistant that pulls from your behavior across Instagram, WhatsApp, and Facebook to recommend products. Meta is turning its AI into a commerce layer that sits on top of 3 billion daily active users' habits, right? So very, very, very strong right there. That's the impact of this model, is the user base that Meta has. So Mark Zuckerberg finally showing Wall Street what Wall Street wanted to see. How are they going to monetize all these data centers, right? Because Llama was falling quickly behind everybody else. Now with the release of this one, Avocado, looking very, very, very good. and competing with other very high performing benchmarks overall. So we'll be curious to see how quickly can Meta monetize this new model that it's just put out, and what will we get to see on the earnings call in just a few weeks from Mark Zuckerberg when he discusses this overall. But a very nice piece of news for Meta overall. So that is everything that I have for you guys in terms of the the introduction and the overall news articles. Now let's get into the juicy stuff, the TA. Okay, so number one, moving into the good old S&P 500. So the S&P getting some really nice distance here, guys. Beautiful daily uptrend and closing above a few key levels. You see it best because there's a whole bunch of gaps right here, right? You see it best on the futures chart. Very, very clean expansion here by the bulls, cleanly above our cluster of moving averages. And as a result, the bulls have created a tremendous amount of space above our most recent higher lows, which are buried down here in about the $6,500 range of the futures, which consequently is also about $650 on the actual SPY. So even if the bears were to take over for a little bit of profit taking down there, there's a ton of space to be had for the bulls to achieve the higher lows. Right now, the only way that we're possibly going to head lower and lower over a sequence of red days is in the event that you have a deterioration of the negotiation talks, or if one of the two parties obviously calls off the entire ceasefire. At that point, the markets will have to reprice to the downside. But whether or not you're long or short, guys, that's the beautiful thing about a market, right? If you do not believe this ceasefire, well, you can always open up some shorts, right? We're coming into resistance right now on the S&P's 678 up to about 685. That would be the top in terms of your short-term time frames. Not yet overbought on the 4-hour time frame because we're coming out of deep oversold levels. On the 1 hour, though, slightly. But you notice here, they held up the price fairly well. Now, obviously, there's a massive gap down below, but unless you get some negative news headlines, they may not fill that gap right away, right? We can even move a bit higher into the resistance band. And at the current time, after 6 short days of recovery, guys, the S&P currently only sitting about 3% off its highs. So if you ask me what I'm doing, it was very clear in yesterday's video, right? Still taking very small swing trades on beautiful uptrending charts overall in very favored themes, such as these that we'll talk about at the end of the video, right? Some of these themes that are on the top of the list right here, and avoiding the themes that just continue to be plagued by the AI narrative or whatnot, right? There's some very favorable themes in the market that you can be trading. There are other names that you should probably avoid if you're trading as well. And also, we can make very good use of the wheel strategy. When we find names that are down or establish local lows and we get some pullbacks into them, we can very easily be selling some options below some of these structural lows that we just set. So there is definitely something for everybody in this current market, depending on the type of person that you are, let alone all the long-term portfolio buys that we talked about last night at the tail end of yesterday's video. Moving on to the QQQs right now, same concept, beautiful new daily uptrend set by the bulls. Obviously still a very big gap coming into resistance right now, 615 down about 606. Same concept as the rest, right? 4-hour, not yet overbought, and the 1-hour time frame a little bit overbought, but holding up the price really well. If you do get a bit of a back test down here, the logical range would be this area that held the lows all throughout the month of February, last November for the most part, and also the China tariff news of last October, and you would be retesting the EMA band. It's not going to be easy for the bears to make their way through here unless, as I said, you get a unwinding of the entire ceasefire procedure. So keep that in mind, right? Very nice support below us, which is 596 down to about 589. Moving on to the good old XLF financials. This one was a very potent daily uptrend after being trending to the downside for so long, guys. You had one little daily uptrend here in January, and then nothing ever since then. It's just been pure downside overall. Daily oversold conditions on XLF financials. Now a beautiful trend reversal pattern right there. So in the event that we are getting some retracements to the downside, I'll remind you, your line in the sand level is still 48.58. Still some phenomenal opportunities across financials. However, the banks did very well today. Like Bank of America got a really big pop. You might remember we were very interested in this name around these lows into oversold conditions as well. And other names like JP Morgan getting some lift, even the credit card companies getting some decent lift off of the bottoms. Now, it's going to take a while for these companies and for the XLF to reverse into a weekly uptrend, as we were saying yesterday, right? This is step number one. Give me the daily uptrend, and then you then have to reset the weekly trends as well. Notice the S&P, big bounce close to its all-time highs. The QQQs, big bounce, not too far off the all-time highs, but financials still lagging considerably behind in relation to just where we are from the all-time highs, right? So keep that in mind. In terms of the weekly bounce, still a little bit soft. It's a 50% bounce. You would like to see the bulls continue their movement here on a daily uptrend, okay, at least into the 618. And the 618 would be approximately right about a couple points higher, about 52. Get up to 52, and then the bulls have a lot of space to kind of reset these trends one by one. Still some great opportunities in financials, but some names that didn't perform too well, still some of the fintech names, guys, right? We'll talk about SOFI later, but look at SOFI, still very weak. Look at Robinhood as well. Robinhood, very weak. They had some nice price action off the top, but came down almost instantly. These names were up like 7-8%, and they gave most of it back. So still very tough in the entire fintech landscape, let alone names obviously like PayPal or even names like Nubank, right? Nubank had a tremendous pop right there and then consolidated for a better part of the day. So still a lot of work to do on some of the financials names and some of the fintech names, but overall, it's a start to something, right? We'll see how much the bulls can keep pushing. Still some great opportunities across the board, but just means that you still have time to accumulate. You don't have to do things too fast in this market at all. There's still some great deals everywhere that you could possibly look. Moving on to healthcare right now. Healthcare having a very nice close to the day. Sorry, let me just erase the drawings right here. So healthcare, daily uptrend, and they actually close at the high of the day. One of the strongest sectors in the mix of things today. So daily uptrend is nice. Higher low sequence is right here, 145. You'll be looking for the bulls to push a little bit more because it's a pretty big weekly sweep of all our recent cluster of lows, right? So you need to see a bigger bounce than this. We'd like to see them be able to bounce at least up to about 152, 153 between the 50 and 618 retracement. It creates a lot of space off the lows, but then we'd be looking for higher low attempts into support down here and possibly looking for the weekly uptrend shift. That would be best case scenario that the bulls can possibly do. Still some phenomenal deals in the entire healthcare sector. I don't play healthcare too much, but still some very nice opportunities across the board, whether it's some of the legacy pharmaceutical names that have sold off a lot, such as AbbVie or such as Eli Lilly, or perhaps even some of the smaller names. You guys know I have one little smaller name, which is TMDX. Good value on this company. So there is some decent value across the healthcare sector if you know where to look. Moving on to SMH right now. SMH, the best performer of the day, 5.76% to the upside. And by the way, that's without NVIDIA. NVIDIA was only up about 2.25%. So SMH running wild today and now back to the all-time highs. Very strong daily uptrend break right here by the bulls. Any backtest you might be expecting this range to act as support. EMAs are also down there on a daily basis. That'll be a revisit of roughly 400, a gap fill essentially, but the bulls are well on their way right now, looking very strong, beautiful weekly move. So we will see if indeed we do get a back test, guys. There are a lot of very nice opportunities still in the markets to this day. You might remember we've been bringing up a lot of them over the past month. Marvell was such a phenomenal pickup back here, but even back here, we were talking about it. Watch for the breakout here was looking really good for the weekly higher lows into the sequence of highs. We've now achieved that, but even Broadcom, you remember we brought up Broadcom a lot. Broadcom embarking on its move right now. So pay attention to Broadcom, guys. Daily downtrend, engulfing move. They give you a back test. Might be time to run right here. The weekly chart looks great after downtrending for so long on Broadcom. They're going for the engulfing pattern, resetting the weekly. And look at this monthly. It's been beautiful monthly consolidation into these lows. Might just be looking to crack over and above into their respective highs all the way up there, 400. It's not going to be an intraday trade or a 1 week trade. No, you're looking for a sequence of a new weekly uptrend pattern to be forming overall. So not all names in SMH are built equal. Not all of them are great opportunities, but there are several that are indeed very nice. And NVIDIA also is one of them, despite the fact that they had some softer price action than some of their sector peers today. Moving on to IWM Russell. So the Russell also having a very beautiful day, leaving behind a gap such as much of the market did. That being said, daily uptrend is very nice right now. If you get some consolidation on a gap fill, you'd be revisiting these EMAs. And now look at this beautiful support area, right? Resistance, support, and then a whole bunch of chop. You got the EMAs down there as well. Tons of space to set the higher lows. As of right now, we're embarking into the resistance high range. So if they need to reset a little bit lower, that would be a pretty decent area to do it. So far, so good. They're looking to once again reverse this weekly trend back towards the bulls. So in terms of the market structure, right, there's only two things we can do if the bulls want to regain control. Either you fully V-shape this, which is the unlikely scenario, or you go for the two-step procedure, right? Usually when you have such a deep cut, you do have to reset it in two different legs. So keep that in mind for many sectors out there. You may get a revisit of recent levels, so pay attention to them depending on what you want to buy. Moving on a little bit further here, XLP actually reacting nicely from the lows, but still definitely not semiconductors, right? So XLP is still a trade that I'm not really participating in right now. I'd rather play some stuff like this, where you truly see the big lift, right? And the Russell as well. Small caps, semiconductors, and thematic names, industrials looking very good right now. One that's not looking the hottest is staples. They are trying something into resistance right now, 84, then about 82. So we'll have to pay attention on that one. But still, this trade might face some resistance, and not just on the technicals, but just the fact that you may be having a few higher inflation prints, right? And a bit higher inflation over the next few months as the higher toll of energy prices works their way into the consumer's pockets, or rather, removes money from their pockets, essentially. So this one, and also consumer retail, just not sectors that I really want to be exposed to right now, because they will have to deal with those macro catalysts overall, which is something that semiconductors don't really have to deal with that much, just because most of the money is coming from corporate spending as opposed to consumer spending. So keep that in mind for staples and retail. Still not an area in which I want to participate just yet. Utilities moving really well, though. This one, suffice to say, daily uptrend, back almost to the all-time highs. The weekly chart always looked gorgeous for just a bit of a back test here. It made me move to the upside, and the monthly uptrend has always been very stable on utilities, guys, for the past few years, essentially, right? Very stable monthly uptrend, not giving back too much, has been one of the strongest sectors relative to the S&P. They didn't lose much, and they gained whatever they lost back very, very quickly. So utilities still one of my favorite places to be. The one that I'm in right now, Next Era Energy, pay attention to it. Looks really, really, really strong for a possible potential breakout to the upside here. And even Vistra, even though Vistra has been lagging behind, this one is kind of like my undervalued one that I think the markets have been discounting a little bit too much recently. A lot of data center exposure, and obviously there's many other new utilities companies that you can play, but those are the two that I bring up on a more regular basis because they're the ones that retail tends to trade the most. Moving on to real estate right now. So real estate popping a little bit today, but I would be a little bit skeptical about these gains. A lot of these gains have just been because the US 10-year has been coming down and the US 20-year has been coming down as well, because now we are in a ceasefire environment. So if the price of oil kind of chills out a little bit, maybe it puts one rate cut back on the table for the end of the year. Maybe not, we'll see. But because of that uncertainty, right, it's very tough to position with size into real estate right now, whether those are the mortgage companies like Rocket Mortgage, or whether they are some of the companies like the home builders. It's just very tough to position in these with size because once again, you'll be fighting the macro. So notice the trades and the themes that I want to play are trades and themes that don't necessarily have to fight the macro at all. The trades that are fighting the macro right now, they may not be favorable. Moving on further to this XLE trade right now, I was telling you guys yesterday, watch for the break, and we got the break, the downswing yesterday after the close with the ceasefire news and continuing into today. So daily downtrend, you've now lost your EMAs that you held since the breakout late December. So clear price action regime change right now. It doesn't mean the bulls can't just recapture this, but if you're waiting for that, you would be waiting for an entire ceasefire breakdown and just oil companies continue to print the highs. If that doesn't happen and we still get some ceasefire updates and the ceasefire is maintained and negotiations go well, you would expect this trade to start its own weekly consolidation phase. So please keep that in mind. If we're looking for possible targets without the bulls having set much support on the way down here, maybe like a 50% retracement down into the 26 EMA, which is between the 50 and the 618. That would probably be the extension of the move to the downside. You'd be looking for a monthly higher low, and that's probably exactly where I would be interested in positioning into these if I wanted to play them, perhaps low 50s, because oil, let's be honest, will stay sticky for a long time. We'll talk about it later, but we've been saying in the past few videos, right? Even if the conflict ends or obtains a ceasefire, we said this starting the week, right? The price of oil is going to be relatively sticky up here because it takes a while to rekindle those supply chains and supply routes and just get the oil out and drop energy prices overall. So even though, this may be the temporary high in oil, let's just say for purposes of the example, I know some of you may not agree with it, but let's just say that's the absolute top on oil. It can stay, just as it did after 2022, it can stay sticky here between 75 and 80 bucks a barrel. So that is also my expectation, which is why the higher the price of the barrel of oil, the more money these companies can make in terms of margins and free cash flow. And after they've been kind of sideways for the past 4 years, I do believe this breakout can get a sequence of continuation throughout the rest of 2026. It's just that at this point, I'm going to wait for a bit of that shock value to wear off. And then I'll try to pick some of the bottoms when, let's just say, we get a trend come all the way down there and you get a trend reversal. I want to play the possible next leg up rather than, saying, well, this is the bottom and the ceasefire is going to fall through. I don't want to speculate. I'll just let the chart do the work for me. If I can't get in and they just move back to the all-time highs, It is what it is. There's tons of other things to trade in the market, but you guys know my style by now. Moving on now to the VIX. The VIX was down 18% today, still above 20, which means it's a very good opportunity still to sell some covered calls, especially if you are wanting to play defense into this big move on the S&P and into this big move on the Qs. If you want to play some defense, the VIX is still high enough that covered calls are very attractive right now. But at the same time, there are still some names that haven't rallied much off their lows recently that we can still afford to sell some put options under the market while the volatility is still high, get some good premiums and get some good distance. So still an environment where being an option seller is currently favored in my humble opinion. Moving on now to our commodities trade. So gold, silver, and oil. So gold, you'll notice they rejected exactly from the area we pointed out yesterday. This big old chop zone down there, 49 at about 4,800, this $100 range into the daily EMAs and sadly getting rejected. But the bulls are still holding this daily uptrend for now. Your daily higher lows are down here, 45.56. So rejection once, maybe they just need to accumulate a bit more strength and go for it again. In the event that you unwind and cut these lows, that is the end of your daily uptrend move and the weekly lower high, right? So we know it's been a weekly downtrend. It's going to be up to the bulls right now, as we were saying, right? When this daily uptrend finishes, measure the size of the bounce. Let's just say, for purpose of example, that that was the high. We don't know it yet. They got to unwind these daily lows first around here, yeah? But let's just say that was the top. How high did the bounce get? About 55%. That's decent enough to give the bulls an opportunity and a chance to reset the daily uptrends, right? Or reset the weekly uptrends, excuse me, and continue on this big old monthly move higher. But at that point, you would need them to hold lower range right there. 45 down to 43 is absolutely crucial for the bulls to defend. But so far, the price action is moving quite well. Moving on to silver. Silver is kind of the exact same concept. It's just trailing gold, both in terms of the size of the bounce, but also in terms of the price action, right? It's just following gold. It's carbon copy, except for silver is a bit softer right now. Moving on, daily uptrend is nice. Higher lows, though, are right down here, 69.84. If you lose these, sadly, that's the end of your weekly move. And since we are in a weekly downtrend, it's now up to the bulls to reset the price action here. Can they do it? Silver did not get as good of a bounce as gold, guys. It is the weaker of the two metals right now. Not even a 50% retracement size right there. So in my opinion, guys, the move is not going to come from silver. The move is going to come from gold. If gold can't do it and gold unwinds, silver is definitely going to unwind. With such a weak bounce right now, if we do roll over and cut these lows, you would tend to argue, well, silver might be able to retest its lows. But at the end of the day, right, if gold doesn't do it, then silver can save this move overall, which is why I've been saying, if you've been trading silver recently, you really have to use gold as your guide. Because silver, it's not going to, gold is not going to go up here and silver just flush the lows and go into lower lows, right? Probably not going to decouple like that. So keep that in mind. Moving on to oil right now. Oil, I mean, this is a wild card trade right now. It is highly dependent on the direction of the ceasefire and whether or not negotiations are able to be made. But as I was saying about 2 minutes ago right now, even if, let's say, okay, for purpose of example, I don't want to offend anybody by saying this, but let's just say this is the entire top of this cycle for oil. Some people will disagree, some people will agree, right? I'm not here to say, I'm just saying if we use this as an example, keep in mind the oil prices will stay relatively sticky for some time, which is why it's a bit tough to trade this one right now because it's so much driven by the progression of the overall headlines, which is why I'm not playing oil specifically. But if we do unwind more, I'm not going to start longing oil. But what I will do is I will take some longs on these energy companies that all throughout the time where the price of the barrel of oil is high, these companies, okay, if the price of the barrel of oil stays sticky between, let's say, 90 and 75 bucks, well, I will want to be playing energy or possibly the pipelines because they generate real cash flows. They are going to have better margins, better earnings for possibly the entirety of this year. So this was the shock pricing coming in, but now we're going to get to see true fundamental expansion for these businesses. So keep that in mind. I'm not trading oil. I'm just using the price of the barrel of oil as a proxy for this XLE trade overall. That's how I'm using it. You guys are free to do what you want with the oil trade, of course. Moving on to Bitcoin and crypto right now. Again, crypto with a very soft day. They just can't get it done, right? On a day where the markets, I mean, the Qs was up 3%, you would expect Bitcoin to put in much bigger of a follow-through move. Sadly, that did not happen. So still not a lot of action in crypto right now. If you want to see me get interested in Bitcoin longs, at this point in time, I need a weekly uptrend because there's been so many fake outs of daily uptrends into just unwind periods of time. And since the weekly bounce here is very weak in relation to this leg of selling, I'm not participating until you close me a weekly candle above 75,600. Do that, great. I'll be interested for some longer duration swings. But at the current time, it's just shaping up to be a bit of a bear flag, isn't it, right? And if that bear flag does break down, you're coming back down here 60,000 to about 55. There's just not that much money flow into crypto right now, unfortunately, obviously. But we'll pay attention. Maybe they can cross around the MACD. Maybe not. We will have to wait and see. Moving on to Ethereum right now. Same concept. Ethereum down 2.56% on the day. There is a daily uptrend here, but let's be honest, right? In relation to the size of the move down, this move to the upside is nothing, right? The retracement size is laughable at best. It's a 30% retracement size. So if you want to see me taking any swing trades on crypto overall and potentially calling this a bottom, you got to give me something that we haven't got in like, what, 6-7 months at this point in time, which is a weekly uptrend. They tried it here, but notice double rejection and then the flush. So unless you can close me a weekly candle above 2,400 bucks, I'm not interested in any swing trades in crypto right now at all. There's just not enough money, not enough flow, not enough momentum into this sector right now. There are so many other super favorable trades that we can put on across the market, guys, that I'm not going to spend my time or my money swing trading crypto right now. There's just no momentum. The moves are just not big enough for my liking. That's everything for the overall market rundown. Hopefully you guys enjoyed that. Now, let's get into some of our big tech names. Okay, so big tech. We're going to go through these a little bit quickly because not much has changed. So Apple's chart looks pretty decent here for a breakout completion in the event the indexes can keep up and the ceasefire also keeps up. You might be looking to explore the 265 up to about 277 range of highs. Price action is pretty good. Apple's reestablished the daily uptrend right now above the EMAs, above our support. So decent level. In the event that we pull back, you might find me once again selling some short puts down here around the 240, 235 range pocket. That is also the only area I would consider for some DCAs because at the current price of Apple right now, it's just a little bit too high for me to add to the long-term portfolio, but a very nice chart. Apple's really doing a good job of holding up against its 12 EMA and this 6 months worth of consolidation roughly. They haven't really given back too much of this move at all. The chart still looks very clean in my opinion, one of the cleaner ones in the big tech landscape. On to AMD right now. AMD trying their best to break and close above resistance right now, which is right about here, 235 down to about 220. So keep that in mind. It's the area that's been really holding the bulls back a while. Resistance here for a minute, support, and then resistance for a while. And then they just blasted through it through earnings. And it's been resistance ever since for the better part of the past month. But we are kind of churning around here, which looks pretty good. The bulls going for a nice expansion move. Best case scenario, you break and close above and they try and sit on it like they did here, but unfortunately got interrupted by earnings. AMD stock looking very good. No short-term swing trades for me on AMD right now. However, a lot of long-term shares and also a leap call contract for myself. You might remember we were highlighting down here on AMD to be a very good deal, but even up here at 230, is it a good deal? We talked about this yesterday, right? If you're a long-term shareholder, okay, I don't see really any reason to sell, and there's also not that much that would prevent me from adding in the event that I wanted to make my position a bit bigger if I had a multi-year time frame, because the valuation down here is still compelling at about 230. Still a lot of growth ahead for the business as it embarks into its large scaling of EPS and revenue ramp over the next 2 years. Moving on to Amazon. Amazon was up 3.5% today. Very strong move coming quickly into resistance, 227 up to about 238. And that's a big level for Amazon, guys. It's been a area that the bulls have gotten rejected from very frequently. Every time we've tried to mount and close above it, there's always been something, right? And every time that something has been earnings, just back-to-back earnings disappointments, which have prevented Amazon from really breaking above 240 and embarking on its massive uptrend rally. However, on the lower time frames, things look pretty clean, right? Coming above this area of price action, we can come back on sit on it. If we come back and sit on it, you guys know what I'm doing, selling some put options down into these lows most likely, and also just further accumulating some shares because at the current valuations, right, around 210, 220, the valuation is very fair in my opinion in relation to the company's forward growth prospects. Nice weekly uptrend embarked right now, which means the monthly lows may be set, and then we have to embark on this big monthly push overall. And that's probably only going to happen if the company can have a decent earnings reception come in the next 2 weeks. So keep that in mind. Moving on to Google right now. Google, very clean break above the highs right now. Google fully engulfing move after such a big and long-standing downtrend culminating in a touch of the 200-day EMA. Google now looking pretty good. If you get a backtest and a gap fill coming into support, 306 down to about 296, an area that the bulls have held in the past. Looks good on the daily, the weekly timeframes as well. Beautiful engulfing move by the bulls. Now they just need to do the second part of things, which is reset the weekly uptrends as well. Am I buying Google up here? No, it's 10% higher than the current valuation, which would put them about a 27 forward price to earnings and a 1.8 peg at this point. Not my favorite deal in the market overall, but I'm definitely not selling any Google shares. There are things that I'm adding to, and there are things that I'm not adding to for my long-term portfolio. Google, I'm not adding to, but perhaps if we make our way down to these lows, now that we have a tradable bottom, you might see me sell some short puts down here, but I'll need to get a pretty decent size retracement and some good volatility if I want to kind of clip into these 275 lows. Other than that, I'm not really doing much on Google. Moving on to Meta right now. Meta, substantial bounce after their release of their new frontier model, coming right into resistance, and it's a big level for Meta, right? It's been a very challenging location of price action recently, which is 650 down to about 630. So keep that in mind. Still not yet above this 200-day EMA, so we can't really say the bulls are back in full control. But in the short term, looking not too bad. Nice daily uptrend, a lot of space. Line in the sand is down here, 560. In the event you get a bit of a gap fill right here, you want the bulls to really make a push into this resistance area and really put an end to this weekly leg of selling, right? It's a very nice retracement size right now. If you put the fibs on that one, it is currently about a 618 retracement. So the bulls do have a lot of space to set up for some weekly higher lows, but you gotta hold on to this area that we're making our way through right now, which is 605 down to 560. You have to hold that and give me the weekly uptrends back. If you want to see me layer on a bit more size for swing trades for Meta, just because they do not have the weekly timeframes just yet, they do not have the monthly timeframes either. We only have the daily. So if you want to see me put on trades ever with size or whatnot, you got to give me some of the higher timeframes back. If not, I'm just not interested. However, what I will be doing on any backtests for these regions, selling some put options down below here on Meta, but at the same time, also adding to my share position, right? 570 or in the high 500s, it's still around a 20 forward multiple and a 1 peg. Good valuation, even at current levels, to be adding some shares. Moving on to Microsoft right now. Microsoft, sadly, they tried to get the break into resistance, couldn't get it done. Software negativity was just too strong today, guys. So once again, rejection from resistance, 405, down about 381. It's a big level for Microsoft, right? And if you want to crack through a big level, you're probably going to need some big news. I do not know if Microsoft's going to be able to really crack and hold this level and expand much before their earnings coming up in the next 2 weeks. So during that interim time, what I'll be doing is I'll be selling some puts down here on any red days, talking about like the 350 area or below if we can find it. Weekly oversold conditions we just came out of. We hadn't hit those weekly oversold conditions since 2006. I bring it up every video because it's just so significant. And we also haven't traded this far down below the 200 weekly EMA in so long. You would have to go back all the way here to like 2011 to find a similar period of time where we breached and traded below the 200 weekly EMA for so long. So Microsoft definitely in a very heavy sell-off right now. At the current time, the only thing I'm doing on Microsoft is selling some short puts under here. Leap call options or leap call debit spreads can be considered, and also adding to my long-term share positions at 370. Very fair valuation, a 22 forward price to earnings for this year, and a 1.21 peg. Moving on to Netflix right now. Netflix, not looking bad. This chart actually looks very, very clean in my humble opinion. Daily is a nice uptrend. Your higher lows are down here, 92.52. And the bulls are trying to use this support area overall, 98 roughly, down about 90, to kind of establish, right, the weekly uptrend sequence. I mean, it's moving nicely on the daily. They're reclaiming the 200 daily moving average right now. And the weekly, they already put in the work, right? The work was put in before the conflict, essentially, and then held up fairly well during the conflict. You're looking for your weekly uptrend break. Next upside target would be 110 up to about 115. So Netflix, pretty decent right now. We highlighted the fact that there are some swing trades from here with a stop below the level and targeting upside resistance targets as well. Doesn't look too bad. That's not a day trade, or it's not a 2-week trade either. It might just be a bit longer. However, the only issue, it could be an issue, it could be a benefit. They have earnings next week on the 16th. Am I adding more Netflix shares up here at a $99 print? No, I would be a bigger fan of buying 90 or under, which is what I did for a large part of time during the January through February sell-off. If you sell off after earnings again, maybe I can add a few more shares at the same time. But for now, not participating too much on the Netflix long-term share buys. Moving on to NVIDIA right now. NVIDIA up about 2.25%. Decent day by NVIDIA. However, unable to break above 185. This whole 185 to 180 range has been such an annoying magnet for this stock, right? Well, we pull back into it, you pull back in. When you pull down below it, you pull back into it really quickly, but then you just get pulled back. It's just this constant magnet. The median of the price range is right about there, right? So keep that in mind. What you'd want to see from NVIDIA, guys, give me a clean break above, okay? If we get a clean break above right here, and then we come back and sit on it, maybe if the ceasefire news continues and the index momentum continues, maybe we can finally see the breakout from NVIDIA. As of right now, coming up a little bit short. If we move to the downside, you guys know me, selling some put options down here. And I'm always a fan at current levels of accumulating some shares around the 165, 180 level. I mean, plus or minus 5-10%, right? It's not going to change the valuation too much. It's like around a 20 forward multiple and around a 1 or sub 1 peg, which is very strong after like 8-9 months of consolidation right now on NVIDIA. It's looking very good. Sideways action, improving fundamentals. We're waiting for the infamous NVIDIA upswing. We'll see when that comes. Maybe it'll come from some of the big tech earnings. Maybe it'll come from their own earnings. Or maybe if the indexes are positive, they can do it before. I'm perfectly fine accumulating until that time. No short-term swing trades from me on NVIDIA just yet. No sustained breakout pattern at the current moment. Moving on to Tesla right now. Tesla started off the day really strong here. Look how much Tesla was up during the day. 5, and then they closed red, down 1% overall. This is what I was saying yesterday, right, guys? It's been a daily downtrend since the month of December. So I'm not participating in any way, shape, or form on Tesla until you give me a daily uptrend and start putting in some work on these weekly timeframes. Until that time, it's just a sequence of downtrends on everything. Monthly consolidation, weekly downtrend, and perpetual daily downtrend as well. You can see, I mean, the bears, they're just, every time you try and clear that 12 EMA, they're just sending you lower and lower. So that being said, we're coming up to the bottom end of support, 340. If you lose this, well, we're going substantially lower, guys. You're coming all the way back down here, 300 down to about 250, which is the 200-week EMA. Tesla has earnings coming up in about 2 weeks worth of time. In my opinion, it's going to be very tough for the stock to get back big uptrends before their earnings. And their earnings, if it's not well received by the market, even if you do hold these levels, that is when you might just get the clean shot to the downside. If you offer me these prices on Tesla, maybe you'll finally see me participate on this name. I haven't really participated in this section at all, but perhaps if you come down there, you may just get me excited for it again. Moving on to Palantir right now. Palantir, 6.2% to the downside. I'm not too sure why Palantir was down so much today. I mean, there was a Michael Burry post in which he said that Claude was eating Palantir's lunch. Obviously, that's not the case. They're two completely different products right now. Possibly a lot of retail people took that, took him to his word and maybe sold the stock. Overall, there was that Claude release. Palantir is part of the IGV index, and there was a lot of sell pressure on software overall today, but nothing specifically news-wise for Palantir, which would warrant them being down 6.2% when the rest of the indexes were doing fine today. So a little bit of an outside move on Palantir today, and unfortunately, that has now unwound the breakout attempt the bulls were going for right now. We are once again back into support, the bottom end of support. You got to be careful here. You crack these lows into tomorrow, guys, and sadly, well, failed breakout pattern right there, shot back down to the lows, and you might need to consolidate a little bit more. It has been a weekly downtrend now for a very long time. The bulls were looking to reverse this. The deeper that you come into this retracement, guys, the more you may just get stuck here. Best case scenario or worst case scenario, revisit these lows or even lower. The way that I'm playing Palantir right now is basically going to be selling put options down here deep into the 120s if they do offer me on a forward moving basis. And also, this is the area that I don't mind adding some shares. Anything in the 130s, 120s, or lower, obviously, is where I actually start getting interested in DCAing back into the position for some of the shares that I sold all the way up there at those tops beyond, the 170, 180, 190 range. So those are the ones that I'm kind of buying back right now. So that's how I'm playing Palantir. Moving on to SOFI right now. SOFI, they tried their best, but look at this selling all throughout the day. Fintech was just not it. Now, they did come down and almost give us a full gap fill, but still, many stocks had a big gap and then ran throughout the day. Fintech did not. SOFI didn't. Robinhood didn't. So many fintech names the same, right? Just such a tough place for fintech right now. And you can see, right, there's been a lot of short pressure on this one recently by their inability to close above the 12 EMA. We have a nice daily uptrend. This is technically a close above the 12 EMA, but nothing strong, right? So if we're swing trading this one to the upside and going for it, the stop loss has to be down below here, right? Because who's in control of this chart? Clearly, the monthly big downswing. Clearly, the bears are in short-term control of this weekly. However, I do believe that if you were short, the easy money has already been made on the shorts, right? At this point, you might be looking for the risk reversal longs, but with the bears in such steep control of this chart right now, the only thing that I'm doing on SOFI is selling put options at the bottom end of this range down here in the whole 15 to 14 landscape. Or you would be accumulating some long-term shares if you still believe in the company or you were waiting to start a position. Well, this is the big area of support that the bulls are trying to currently defend, and the valuation at 15 bucks is not too bad. 25 forward price to earnings and a 0.76 peg. Moving on to Uber right now. So Uber, also very awkward day for Uber. Uber actually popped up substantially today, right? About 5%. And then they too gave it almost all back. Now, some of these names were maybe just going for the gap fills before putting on a bit of a run, but I'm not going to speculate like that, right? There's so many other names that, broke a gap and then, or rather created a gap and then just ran to the upside all throughout the day. Uber, however, was not one of them. So still some names that are somewhat weak in relation to other themes in the market, and some of the large cap names, even Uber is still one of those names, still very weak in relation to index participation of the rest of things, right? So that being said, the way that I'm playing Uber is selling put options towards these lows, not a bad opportunity, and with a open to DCA territory down here at about 65.60. Still, the weekly bears, man, they're just too powerful right now. If you get another lower high, we are going to come down here into the mid to low 60s. In my opinion, such a big breakdown would probably only happen if you get the index breakdown as well. But Uber is probably coming into its final resting location. I truly do believe that this 70 to 60 area is probably going to be final resting place as it was in 2024 and 2025 on many different occasions. So for that reason, I'm not really looking for many swing trade longs just because the chart doesn't really give us the indication that the bulls are ready for that. I'd rather play, upside momentum instead of trying to pick big reversal bottom points until they show me confirmation. The only thing that I'm doing down here on Uber, playing a bit of the wheel strategy, selling puts under the market into this range, but also buying some shares for my long-term portfolio at 70 bucks. I think the valuation is very fair. 21 forward price to earnings. It's a one peg, 6.5% free cash flow yield. Decent valuation for this company if you enjoy Uber. Moving on to TSM right now. TSM, very strong push by TSM today, right? See, this is a company, a lot of semiconductors, unlike Uber or SoFi or other names like Tesla or Palantir, right? Gap up and held the gap the entire portion of the day. So semiconductors still extremely, extremely strong as part of the data center build-out trade. That being said, beautiful daily uptrend. In the event you do fill the gap on TSM, you are coming right back down there, EMAs, and also your previous little resistance highs and now support highs that are below us. Very decent breakout though. TSM making quick work of this weekly downswing in just a few days. Very nice. They never lost the weekly time frame. Relatively a double bottom right there. So still maintaining the capacity for a further breakout beyond the highs. TSM looking very strong here in relation to the rest of the market. One of the best performers here on my list. Very good company up here at 365. Am I interested in buying? It's at the top end of what I'd be willing to pay, even at 340. Many times over the past few months, 330, 340 was like the top end of what I would be willing to pay on TSM if I were looking to add some shares. I'm personally not. I can't really blame you for doing so. There's nothing wrong with the company either, but obviously is looking very good. The swing trade attempts were probably would have had to been made in the last few days. We talked about it, right? Stop loss below the lows, and then you're just targeting weekly uptrend breakouts. It's a little bit late at this point to chase this trade, in my opinion, but if you're trying to do it, I wish you the best of luck. And that is everything we had today, guys, for the overall market rundowns. Hopefully you did enjoy that. And now let's move into your guys' favorite part of the video. And today, yesterday we took a look at the long-term portfolio buys that I was executing and would be executing on an ongoing basis. And I gave you guys some thresholds, like beyond which price I don't want to buy anymore for like 20 different names for the long-term portfolio we went over yesterday. Now, let's once again talk about the key themes in the market. What is working and what is not in the event that you are trading the markets or in the event that you want to participate in these themes for the next 12, 18, 24 months with some smaller positions or some thematic longer duration swing positions. Okay, so today we're going to be talking about setting expectations in terms of velocity, in terms of momentum, and in terms of just finding some very nice charts that we can trade if that is our goal for velocity, for momentum, for speed, and for trend continuation trades, guys. There's two types of trades that you can make in any given market. There is the trend reversal trade, whereby you take a company like Uber or like SoFi that's in a weekly downtrend and you identify key areas of structure and you're looking for the eventual recapture of longer term timeframes to give you good momentum that you can layer on trades to the ups, or rather that you can pick a local bottom, right? Now, a lot of people get caught up becoming community members when they're only trying to trade because you're constantly trying to pick a bottom of a stock or a sector that's out of favor. Names like that can include Uber. Names like that can include SoFi. Now, I hold these positions as part of long-term portfolios, and that's fine because it's a long-term time horizon. But if I'm trading on these names with the expectation of flying to the upside without any signs of momentum and any signs of trend changes, right? Or if I'm not trading in a sequence like this, it's not going to be that easy. And there are many themes in this market that represent just low momentum and sectors that are just perpetually out of favor. Number one, of course, is software. Take a look at Duolingo, right? Perpetually trying to pick a bottom on Duolingo. I see this name a lot on social media, and people get caught up because I'm pretty sure a lot of people enter this trying to pick the bottom for a short-term swing trade, and then you kind of get stuck as community members, and you're forced to hold the bag for something that has no momentum, and that's just purely out of favor. Another one that I also own in my long-term portfolio, not that big of a position, but is UiPath. UiPath has had 2 earnings cycles now to prove to the market that it had the growth and to rekindle some of the bulls into this trade. It hasn't been happening, right? The same thing can be said about even some marketing and advertising software, such as Zeta or such as the Trade Desk. Look at the Trade Desk, right? It's just terrible right now. People try to keep buying this bottom, and the bottom just keeps falling out on them. And even a company like Meta, right? Which is why I'm not really swing trading on Meta right now. It has no time frames. It has no weekly time frames uptrends. It has no monthly time frame uptrends as well. So these companies, if you're interested in picking a risk reversal trade, meaning you're looking to accumulate some lows and then possibly carry them for a longer term, you can make a thesis surrounding some of these companies, even Intuit, right? I'm pretty sure some people get into Intuit. That's tough to say back to back, thinking that the stock is just going to reverse instantly, right? Until they give you a weekly uptrend. Well, I mean, you shouldn't really be looking for anything, right? There's no momentum there. You might as well just wait for the bulls to prove it to you. If not, it's just going to be the same thing, right? Figma, exact same concept. Even a name like AppLovin, which I brought up yesterday as one of my favorite longer-term portfolio buys, keyword, longer-term portfolio buys. There's just no momentum here, right? You'd rather wait for the bulls to give you some sort of an uptrend to be basing some trades off of. You'd rather play it in an environment where it has defined weekly uptrends. Because when they lose the higher timeframes like this, guys, it takes a long time to get them back. So if you're trying to buy the bottoms on Salesforce or things like that, or even like Adobe, okay, because you're thinking it's going to rise instantly, it's just not going to happen. It doesn't matter how cheap the valuation gets, guys. The momentum is just not there. Look at ServiceNow. It's the exact same concept. Dare I say, even some consumer-facing stocks, right? Like look at HIMS. The momentum is not there. There are times to trade these stocks, and there are times to just wait for the chart to tell you when it's advantageous to trade them. And a lot of these are the exact same concept. Consumer retail is the exact same thing. I'll bring up some companies that sometimes are very popular to trade because we have very nice momentum. Other times when we have no time frames, no weekly uptrends, no monthly uptrends, right? I feel that some people are buying these names for the wrong reasons. Buying them for shorter term swings that just never come, and then you end up being a community member and you want to DCA and DCA into these companies, but you got to ask yourself, right? These companies like Elf, or these companies like Nike, right? And even Elf, like I hold some Elf shares, not a very big position, but I hold some for the long term, and I still believe in the company's long-term prospects, but I'm not trading them. Nike, I don't own, and nor would I want to trade either. There's just no momentum here whatsoever. It's just perpetual downtrends, and people just get stuck in them, right? The same thing can be said about many names that had former momentum, but that just don't anymore, like Celsius Holdings, right? There's just nothing here. They lost the monthly uptrends, okay? They had it, like there was a sequence of time here for a while that playing Celsius Holdings, when you recapture the weekly uptrends, then you can get some higher low trades in, right? Stop loss and go for the upside breaks. When you lose trends, it's just very hard, guys. And I feel that, for fear of sounding like a broken record, I feel that some people are buying these ones for the wrong reasons, buying them for short-term upside or trying to pick local bottoms, trying to pick trend reversals, and you just get stuck. And meanwhile, right, while you get stuck, I mean, look at all of these names that are printing highs day after day because they have the momentum, right? I'll even pick one that was out of favor for a long time that people don't believe in. But look at Intel's chart. It's just super clean, right? the entire duration of this conflict, Intel, that has its own problems because it's part of a favorable theme, semiconductors and the build out, right? They barely gave back these lows, barely. Huge upswing, and then just slight consolidation into this support range. And then boom, you get the massive breakout, right? GLW, Corning, names during the entire portion of the conflict, right? They had the loss of the momentum, they got it back, and they're building back price slowly. But look at these charts, right? This is where the momentum is. So if you're trading the markets, you should be looking for these key areas of reversal. You come down to the weekly 12 EMA like that, right? Bears are in control. You wait for the shorter term timeframes to give you an entry signal, which would be a daily uptrend break. You set the stop loss below the low, and then you just ride, right? Literally just ride them. AAOI is kind of the same concept. Coming back to the 12 EMA on the weekly timeframes, and as soon as you get that nice little breakout, right? Very easy. Stop goes below there, and then you can target massive levels of upside. As a matter of fact, we're in these types of trades in our Discord, right? A lot of the high-flying stuff like coherent at the same time, right? Gives you the daily uptrend after, look at this chart, right? It's just really, really, really nice momentum. And it's been that way since September, right? I'm pretty sure some of you guys maybe look at the monthly time frame and say, wow, that's too extended. I can't play it. Well, maybe not for long-term risk to reward up here, right? But for shorter term trades, if you're not looking at charts that somewhat look like this, I'm not saying charts that are just blown off the top, right? But that have very key areas of interest of price action that when they come down to, you got to pay attention to them, right? SanDisk is kind of the same concept, right? Coming to the weekly 12, it's done this, guys, for like a year at this point. You know what I mean? So if you're looking for momentum, these are the names that have it. And if you're not paying attention to them, you're doing yourself a great big disservice, right? And that's why you're seeing these names. Maybe it frustrates you that you're in a bunch of names that you thought would be good for some trend reversals, but they just keep dropping, right? As opposed to kind of just playing these names for what they are. Nice momentum names in very favorable themes. So keep that in mind. That's the subject that I wanted to cover kind of like today, because a lot of this stuff on these lows, guys, same thing like Rubrik. Rubrik's a great cybersecurity company, but there's just no momentum here. They lost it a long time ago. Weekly downtrends, monthly downtrends as well, right? So there's nothing wrong with picking up companies at good valuations that you have high conviction in for the long term. But if they don't have any monthly uptrends or weekly uptrends, don't expect them to reverse very fast, especially if they're part of an overall sector that's just been very out of favor with the markets recently. Consumer retail, a lot of consumer staples, software, et cetera, et cetera, et cetera. They just have not been popular. And it's been like 6, 7, 8 months at this point in time, right? The sectors that have been popular are the ones that we have been covering on the channel starting January when we were talking about the great rotations in the market. And the sectors are very simple, right? Semiconductor connectivity, photonics, right? You see these explosive moves all of the time, right? You don't have to position very heavy, but if you're looking for momentum, look no further. AOI, GLW, coherent again, right? Blasting through the top right there. The memory names like SanDisk. I was showing you guys an ETF, DRAM, this ETF. We initially positioned when this one launched. Now it's up massively, right? So SanDisk, Micron coming back as well. You also had SK Hynix in that ETF too. A lot of you guys can't trade it, but SK Hynix, I mean, these charts are just, they're great for trading, right? They're great for trading. When you get some very nice risk reversal moves, it's very easy to set stop losses and go for the next sequence of highs if you know those names are very popular. People want these names. The same thing can be said about names like Vertiv, data center connectivity. Once again, cooling solutions for the data centers, right? If we're looking, you get a very nice bounce right here, consolidation, very easy. They give you the stop loss levels of consolidation, right? Very easy, tap the 12, and then they just move for another leg. So Vertiv has been hot. For a long time, they've held these trends, right? This chart is literally like the polar opposite of Duolingo. It's literally the polar opposite. So would you rather play something that's working very well or play something that's not working very well? And you can even derive that within certain themes at the same time, such as the neo cloud providers. I've been saying this for a while now, for the past 2 months, right? The chart that looks the best for momentum trading in neo clouds is not APLD. It's not CIFR. Okay. Even though we have some nice breakouts today with the rest of the market, this one was up 10. Their whole this whole segment of the market was up today, right? It's not IREN, it's not CoreWeave, and it's not Oracle. The one that has the best chart and the most amount of interest, and in my opinion, the clearest business model, even though a lot of them have some overlaps, but this one invests in many different businesses. That's why their enterprise value is a bit more defensible, is Nebius, right? So Nebius is just very, very easy. You get the big breakouts, big weekly uptrends into some resistance range, into some support ranges, the nice back tests, and you get the fall through, you get the explosion with the curling of the MACD, right? Some of the other ones, not that they're not good, it's just they don't have that same velocity. They don't have that same interest of people. So even within certain niches that are popular, there are winners, right? And there are some names that are just lagging behind. And I'm a fan of playing the winners of those sectors overall, not just getting too fancy with it and saying, well, Nebius has been doing so good recently, so let me just buy CoreWeave to play the catch-up trade, right? That may be true, but you can also have both. But I am a big fan of playing the sector leaders overall, so keep that in mind. Those are just some themes that have been working well. Bloom Energy, very clean right there. GE Vernova, same concept, right? Look at this chart. It's just fantastic. So there's a lot of trades that can possibly be made on these because they have the velocity, they have the momentum overall. So if you're looking to trade momentum, depending on your system, I'm not here to tell you guys what system to use necessarily, but if you are swing trading, try your best and go for the trend continuation trades as opposed to the elongated trend reversal trades. Maybe this is the bottom. Maybe this is the bottom. Maybe this is the bottom. And we're about to do this, right? It's the same thing that people were asking about UNH last year. Should I buy UNH down here? And I was saying you should only buy this one if you have years to wait for the reversal of this momentum and of this narrative, because sometimes it could take a very long time. Look, UNH still hasn't set the monthly uptrend. Still, it's been a year and they still have not done it. So if you're stuck in UNH, I'm not here to say it might not be a great buy for the long-term portfolio. Of nothing against that, right? It's the same people that are in NVO expecting a quick recovery. It's just not going to happen, right? Not until the market shows you that that's what it wants. So far, the market doesn't want those names. What does the market want? Well, it's telling you every single day. It wants data center connectivity trades. It wants semiconductor trades. It wants even, you guys may think it's ridiculous, but if you're trading, guys, you can't have any preconceived notions on this stuff, right? It wants space. It clearly wants space. Planet Labs, ASTS looking really nice. Rocket Lab lagging a bit behind though, however, at this point in time. Rocket Lab lagging a little bit right now. Fly, and many, many others, right? It wants space. Like you're having big momentum in the past 2-3 weeks. And it's your job as a trader, especially if you're looking for momentum and whatnot, it's your job to identify these trends, right? Some of the ones that aren't favorable right now for momentum are a lot of the drone plays. They were very favorable in early January and since have fallen off. So these can be good for long-term investments, and that's what I'm buying them for. But when I'm looking to put on short duration swing trades, I'm not looking at these drone names necessarily. Ondas, great for the long term, right? But still a little bit choppy right here. They're offering a stop loss level with the recent lows, but drones and military, let's be honest, since the start of the war, large caps came back today, but now they've finally done it. Now you get a stop loss area, and this includes a bunch of things like RTX and LMT, right? So they were into their weekly consolidation phases, which was highly required after pumping and pumping and pumping. If you're trading, don't need to pick them individually. You can also just go for an ETF, right? Giving you a clearly defined stop loss. It is a quite nice chart, although you have to reverse the weekly at this point in time, right? But look, right? The market's clearly telling you what it wants at this current time. So there's no need to fight it, right? There's many different ways of playing within the sector or playing the ETF overall. For space, there's a whole ETF called NASA, which actually holds some SpaceX shares as well. It's a somewhat concentrated ETF for space. So there's many things, there's many ways to play it. Even nuclear. Nuclear is looking good. Look at this ETF right now. We've consolidated since the start of the conflict, right? But have we lost anything? Not much, right? Nice consolidation here. Consolidation lows. They're giving you a tradable bottom on this ETF. And look at the monthly chart. It's just consolidation sideways. Beautiful. It's a key theme. It's a bit of a longer duration theme as well. So you can play it two ways, either for the long term, but also looking for some key breakouts here out of the top end of the resistance range. So pay attention to it, right? Energy. It's been the same thing that I've been talking about since January, before the SAS sell-off in February, before the military conflict started early March, and even after the ceasefire. The market's clearly telling you what it wants, right? So keep that in mind when you're looking for overall trades, right? So drones, military, and robotics is one theme. Energy is another theme. Data-centric connectivity is a third theme the market really likes. Think of the Vertivs, think of the photonics names, et cetera, et cetera, et cetera. The neo clouds, you can include in that as well. And also, the theme number 4 would be the space trade. Those are the 4 aspects of the market that the market just really enjoys right now, right? So when you're thinking of momentum, please keep those things in mind. Don't enter things for the wrong reasons, right? You would not be entering Duolingo for a short duration swing trade trying to pick the bottom. It is much harder. And I've been doing this, guys, for like over a decade right now, like 13 years, right? it is much harder to identify the pure trend reversal to counter all of this monthly selling, okay, and move this into it's much harder for the bulls to get, see this daily uptrend sequence right there? Well, as I always say, right, this daily uptrend sequence right there doesn't really mean much unless you trade with a stop loss. Why? Because you're buying counter trend to the longer term bears here. It's just not going to work, which is why this bounce gets a little bit of lift right here. That's the daily uptrend. Okay. If you're not trading this as a stop loss on this breakout right here, you're not trading this as a stop loss. Who are you trading against? You're trading against all these guys. That's not going to work. Look at the monthly. You're trading against all these guys. That's not going to work, right? There was a time where you could trade with the trend, and there's times where your counter trend attempts are just that. Counter trend attempts that lack follow through because there's a whole narrative, a whole sector of the market that is out of favor, and the institutions or CTAs or the algos are literally trading completely different things than you. It's all about money flow at the end of the day, guys. So keep that in mind. That is my piece that I wanted to cover in today's end of the video, right? So hopefully you guys enjoyed the entirety of today's video. If you did, consider dropping a like. We really appreciate it for the growth of the channel. Consider subscribing to the channel as well. We do these recaps every Monday through Thursday after the close to recap the day's events. And last but not least, if you have any questions or if you are trading certain stocks that I haven't covered in today's video, perhaps maybe some that are part of the key themes that I mentioned, definitely leave them down below in the description. Always love reading your guys' comments. I will get back to you as soon as possible. Wishing you guys a very beautiful day in the markets tomorrow. I'll see you after the close tomorrow. Have a good one. Peace.